Welcome to Christine's Finance and Investment channel. Have you ever heard the saying, the first $100,000 is the hardest? It's a common phrase in the world of finance, and for good reason. Building wealth, especially that initial six-figure sum, can feel like an uphill battle. You're diligently saving, investing, and managing your money, but the finish line seems miles away. The truth is, several factors contribute to the difficulty of reaching that first $100,000. One of the most significant is simply starting with limited capital. When you're just beginning your financial journey, your investment portfolio is likely small. This means that even with decent returns, your actual dollar gains are modest. Imagine earning a 10% return on $1,000. That's only $100. Compare that to a 10% return on $100,000, which yields a much more substantial $10,000. The difference is significant. Beyond limited capital, income constraints also play a crucial role. Early in your career, your earning potential is often lower, leaving less disposable income to save and invest. Building a solid financial foundation takes time and consistent effort. It requires weathering market fluctuations, resisting impulsive spending, and remaining committed to your long-term goals. However, there's good news. The first $100,000 is a pivotal turning point. You'll experience a shift, a noticeable acceleration in your wealth-building journey. Think of it as reaching the peak of a mountain. The magic of compound interest starts working in your favor. Your money begins to work harder for you, creating a snowball effect. Reaching the $100,000 mark unlocks new opportunities and perspectives. You gain access to a wider range of investment options, many offering higher returns. Explore real estate, private equity, or venture capital. These avenues are typically unavailable to smaller sums. Reaching this milestone coincides with personal growth and financial understanding. You've gained valuable experience managing money and making informed decisions. This knowledge empowers you to make savvier choices, fueling growth. The journey to accumulating wealth, especially that coveted first $100,000, often begins with a hurdle that can seem insurmountable: limited initial capital. When you're just starting out, your investment portfolio is likely modest, and even with a sound investment strategy, the actual dollar gains can feel small. It's like planting a tiny seed. You know it has the potential to grow into a mighty tree, but the initial sprout seems almost insignificant. The first year's growth amounts to $350. The challenge lies in maintaining the motivation to continue investing and saving diligently. It's crucial to remember that even small contributions, consistently invested over time, lay the foundation for significant future growth. In addition to limited initial capital, income limitation is a significant constraint. Essential expenses like housing, food, and transportation consume most of the income. This leaves little for saving and investing. Accumulating substantial wealth can feel like a distant dream. However, small, consistent savings contributions make a difference over time. While limited initial capital and income constraints can feel like significant obstacles, time is your greatest ally. The power of compounding thrives on time, allowing small investments to grow exponentially. Consider two individuals. One starts at 25, investing $200 per month. The other starts at 35, investing $500 per month. Despite larger contributions, the earlier investor reaches the goal faster, thanks to compounding. Start early, even with limited resources. The earlier you begin investing, the more time your money has to grow and compound, creating a snowball effect. Think of it as planting a tree. The sooner you plant, the more time it has to grow into a towering presence. As you embark on your journey to financial freedom, one concept stands out: compound interest. Often hailed as the eighth wonder of the world, compound interest is simple yet powerful. It's the ability of your money to make more money, not just on your initial investment, but also on any accumulated interest. Imagine a snowball rolling down a hill. It starts small but grows larger with each rotation. Your initial investment is like the starting snowball. As it earns interest, those earnings are reinvested. Over time, this creates a snowball effect, leading to exponential growth. As the years go by, the power of compounding truly takes hold. Each year, your returns are calculated on a larger principal amount, creating a snowball effect that accelerates your wealth accumulation. The larger the snowball grows, the more snow it gathers with each rotation, gaining momentum and size at an increasingly rapid pace. Returning to our previous example, let's fast forward 10 years. With a 7% annual return compounded annually, your initial $10,000 investment would have grown to approximately $19,672. After 20 years, the snowball would have swelled to around $38,697. Notice how the growth isn't linear, it's exponential. This is the magic of compounding in action. The beauty of compound interest is that it rewards patience and consistency. The longer you allow your investments to grow, the more significant the snowball effect becomes. Time becomes your greatest ally, allowing your wealth to accumulate at an accelerating rate. This is why starting early, even with small contributions, can have a profound impact on your long-term financial well-being. The concept of compound interest is especially empowering when you consider that initial challenges, such as limited capital or income constraints, become less significant over time. As your snowball of wealth grows, those initial hurdles seem smaller in comparison. The key is to start, no matter how small, and remain consistent with your contributions. Think of it like climbing a mountain. The initial ascent might be steep and challenging, but as you gain elevation, the view becomes more expansive, and the air gets thinner. Similarly, the initial stages of wealth accumulation might require discipline and sacrifice, but as your investments compound, you gain financial momentum, and the path forward becomes less daunting. The journey to financial freedom is a marathon, not a sprint. Compound interest is your secret weapon, a powerful force that works tirelessly in the background, amplifying your efforts and propelling you towards your financial goals. Embrace the power of compounding, remain patient and consistent, and watch as your snowball of wealth grows larger and more unstoppable with each passing year. Reaching the $100,000 milestone in your financial journey is akin to unlocking a new level in a game. With a more substantial portfolio, you're no longer limited to basic savings accounts. The world of investing expands, offering a broader range of options. One such avenue is real estate, a tangible asset class favored by seasoned investors. Real estate offers long-term appreciation, rental income, and tax benefits. Another option is private equity, investing directly in private companies. Private equity can offer substantial returns, becoming a part owner of a growing company. As you accumulate wealth, you'll encounter leverage, a tool that can amplify returns and risks. Leverage involves using borrowed money to increase investment exposure, like using a lever to lift a heavy object. A common example is a mortgage. Using borrowed money to buy a home amplifies returns as the home's value appreciates. But remember, leverage is a double-edged sword. Declines in value amplify losses. Use it wisely. The world of investing is often described as a balancing act between risk and reward. As you explore the expanded investment opportunities available with a larger capital base, it's crucial to develop a clear understanding of your risk tolerance and investment goals. Not all investments are created equal, and what might be suitable for one investor might not be appropriate for another. Higher return investments typically come with higher risks. For instance, investing in a startup company might offer the potential for exponential returns if the company succeeds, but it also carries a significant risk of loss if the venture fails. Conversely, low-risk investments, such as government bonds, offer stability and predictable returns, but might not outpace inflation over the long term. It's essential to diversify your investment portfolio, spreading your risk across different asset classes, industries, and geographies. This diversification strategy helps mitigate losses by ensuring that a downturn in one investment won't cripple your entire portfolio. Think of it like a balanced diet. You wouldn't eat only one type of food for optimal health. Similarly, a well-diversified investment portfolio provides a balanced approach to wealth management. As you navigate increased investment opportunities, guidance from experienced financial advisors is invaluable. Financial advisors help assess risk tolerance, define goals, and develop personalized strategies. Think of them as seasoned guides navigating uncharted territory. They provide insights, help avoid pitfalls, and keep you on track. They offer emotional support during market fluctuations, focusing on long-term goals. Remember, financial freedom is a marathon, not a sprint. Approach new opportunities with a balanced perspective. Diversify investments, seek expert guidance, and stay committed to long-term goals. Accumulating your first $100,000 is transformative, instilling invaluable financial habits. Saving diligently, investing wisely, and resisting impulsive spending cultivate financial responsibility. It's like learning to ride a bike. Once mastered, it becomes second nature. Consistent saving is a significant habit. Regularly setting aside income develops disciplined cash flow management. This habit allows you to weather expenses, seize opportunities, and build a secure future. Conscious spending choices become ingrained. Differentiating between needs and wants aligns spending with values and goals. Mindful spending supports financial well-being. Striving for a six-figure savings goal involves financial education. Exploring investment options and risk management empowers informed decisions. This knowledge transforms you from a passive observer to an active participant. Imagine learning a new language. With practice, you gain fluency. Expanding financial literacy unlocks a deeper understanding of money. This knowledge extends beyond investments. Awareness of economic trends and inflation impacts savings. Differentiating sound advice from schemes protects you. Informed choices support long-term financial health. The journey to $100,000 cultivates the mindset, habits, and knowledge to master your financial destiny. Transition from financial uncertainty to empowerment. Engage in informed discussions about money. Inspire others to take control of their finances. Financial discipline and knowledge benefit other life areas. Approach major decisions with financial understanding. Align choices with overall goals and values. Improved financial habits create a virtuous cycle of growth. Positive outcomes fuel confidence and motivation. Think of it as a snowball gathering momentum. Each positive experience adds to the momentum. Financial freedom becomes about aligning actions with knowledge. The journey extends beyond the dollar amount. Cultivate habits, knowledge, and confidence for financial destiny. Skills and mindset serve well beyond the initial milestone. Reaching $100,000 boosts confidence and self-efficacy. It's a tangible result of discipline and commitment. Imagine training for a marathon and crossing the finish line. The accomplishment empowers you to tackle new challenges. Financial agency instills confidence. Set ambitious goals and achieve them. Confidence spills into other life areas. Approach money matters with calm and calculation. Reduce financial stress and anxiety. Financial confidence influences decisions. Achieve overall well-being. Success begets success in personal finance. Reaching $100,000 creates momentum. It's like pushing a boulder uphill. It gains momentum. Positive reinforcement fuels motivation. Set new financial goals and build on progress. The finish line feels within reach. Momentum leads to a positive feedback loop. Experience benefits of financial discipline. Maintain positive habits for further strides. Accumulating $100,000 shifts your perspective on money and wealth. Money becomes a tool for creating the life you desire. True wealth encompasses more than financial abundance. It's about freedom to design your life. Align money with values and aspirations. Appreciate patience, discipline, and long-term thinking. Consistent effort leads to remarkable results. Embrace ongoing financial growth and personal development. Financial well-being is about continuous learning and adapting. Think of it like tending to a garden. Plant seeds, nurture growth, and reap rewards. Continue to water, fertilize, and prune. Financial well-being requires ongoing attention. Psychological shifts are invaluable assets. Embrace challenges and triumphs ahead. Navigate personal finance with confidence. The journey to $100,000 is challenging. It demands patience, discipline, and commitment. Early gains may seem slow. Reaching $100,000 signifies a pivotal shift. Overcome initial hurdles for accelerated growth. Think of it as reaching a summit after a climb. Compound interest works its magic. Returns generate greater returns. Wealth propels forward at an increasing pace. Reaching $100,000 triggers psychological shifts. Confidence empowers calculated risks and new opportunities. Prove discipline and financial acumen. Invaluable habits extend beyond the milestone. Consistent saving and mindful spending become ingrained. Master your financial destiny. Embrace ongoing learning and adapting. The milestone is a testament to commitment. Knowledge and mindset serve well in all life aspects. Celebrate achievement and set loftier goals. The financial landscape evolves with new challenges and opportunities. Embrace challenges for growth. Avoid complacency, it's not the finish line. View it as a stepping stone. Reassess goals and adjust strategies. Seek guidance from trusted professionals. Maintain financial habits and mindset. The journey to financial freedom is a marathon. Consider the legacy you want to create with your wealth. Use resources to make a positive impact. Support causes, invest in the community, and leave a legacy. Inspire and empower others with your journey. Share knowledge and mentor others. Create a ripple effect of positive change. The journey lays the foundation for financial security. Embrace challenges, celebrate victories, and create a positive impact.